Hey, what's up, guys? This is Jay Moore, the Healthy Accountant. All right, so in this video, I'm going to talk to you about retirement plans. And this is all being discussed because of the most expensive tax mistakes, the 10 most expensive tax mistakes that business owners make. And in the video, the original video, I talked about all the traditional plans, which I want you to go back and check those out. You know, the SEP, the simple IRA, the 401k, the pension plan, like all of those. I talk about those on the video. I'm going to talk about something different in this video because really what I want you to do is I want you to start thinking about retiring rich. And here's why I want you to think about retiring rich. Most people don't retire rich. Most people that invest into the traditional methods of retirement typically retire with little to minimum. I just say minimum. I mean, you may have more, but most people, don't. And so what I want you to start thinking about is how could you retire rich? All right, here's how you can do that. You've got a business, so that's good. You're going to work this business and you're going to create a cash making machine. That's the first thing you have to do. Your business must become a cash making machine, not so that you can walk away from it or sell it, but so that it can continue to generate cash. But to retire rich, I want you to start thinking about how could you purchase real estate. Here's why you want to purchase real estate. You could take the hundreds of thousands of dollars that you would be putting into a traditional retirement plan and you could put it into a hard asset that you can't lose from. Here's why you can't lose from real estate. It's physical. So if I take $100,000 and I dump it into a piece of real estate, even though I don't have the money anymore, that real estate can now produce an asset, which is cash. So imagine if you take $100,000, you dump it into a piece of real estate, and that piece of real estate can pay you $1,500 every single month, maybe $2,000 a month, but just say $1,500 a month. Now, $1,500 a month is $18,000 per year. So $18,000 per year. In 10 years, you would have earned $180,000 from this asset, which means that you would have earned back all of the money that you put in. But here's the thing. The money that you put in didn't go away. You still have the asset. So now you've got this $180,000 really in profit that you received from this asset. There's a clue here, guys. You've got cash money. But the thing is, if you're looking to retire, you should have cash coming in from the assets that you invested in. So the thing about stocks, the thing about 401ks, is that there are penalties. There are a lot of penalties around pulling money out. You could literally pull your money out of your property tax-free. Think about this. You put $100,000 in, and now maybe your property, because you paid it down, it's appreciated, or you have enough equity, you can pull money out. You could go refinance the property, pull the $100,000 out of the property tax-free. Tax-free. You don't have to die, and you don't have to retire to do it. Tax-free money. You never have to sell this asset, and you can always be paid from this asset. Now, you do have to pay taxes, ordinary income taxes, on what you net. So if you got $1,800 a month coming in, well, maybe it's costing you $1,000 a month. So now you've got $800 in actual profit. So you see how that works, guys. But the tenant that you brought in, they are the ones that will pay off your mortgage. You won't have to pay off the mortgage if you had a mortgage. Maybe you bought the house free and clear for $100,000. The tenant's going to pay off everything that you put in. So I want you to start thinking a little bit different about retirement. And I want you to say, you know what? Wow, if I invest in hard assets that produce cash flow, you can even use businesses like this. But I would say real estate may be the best solution because it's hard to gauge with business sometimes. So real estate, and I'm not in real estate, so I'm not giving you an opportunity in real estate, but what I am saying is that that is a vehicle that you definitely should look into using for your retirement. Imagine you have 25, 30, 40 properties. But I want you to think about that differently. Instead of buying one piece of property, that has a single unit, buy a one piece of property that has 32 units. So now it's a bigger investment. Maybe you had to put in 300 grand. You put in 300 grand, you get 32 units. Now all these units are producing $1,800 a month. Ooh, that's on fire. Your cash is igniting now because of this real estate. But what if you had 100 units, all generating $1,500 to $1,800 per month? Man, you're killing it. But here's the thing. That same 500 grand that you may save up, in your 401k or IRA or something like that, you can use that same money to put into real estate and generate cash flow that basically is impenetrable. If you go and look up a lot of successful people, they had real estate. And because they had it, they were able to really be free. So guys, think about retiring rich. Use real estate to do it. If you got some questions, you want to know where to go, I do have some places where some folks that you can probably call to be able to send, if you didn't want to go learn how to do it, definitely can help you out with that and give you some ideas. So guys, I look forward to seeing you on the next video. Make sure you come back. Check it out. We've got a few more to go before we get to the end, because I definitely want to make sure you understand exactly how taxes can help you grow your life and grow your business. God bless you guys. Take care.